because one of the issues in Canada that we have, Ron, is that there is a lack of liquidity in real estate. And a big reason for this is actually because of the capital gains and the tax associated with triggering capital gains, right? So essentially, what you have is you have owners who are holding property essentially forever, so to speak. And the only time they'll sell is if they really need to sell because they know that, especially if property has gone up in value, which is usually the case over time, they're going to have these unrealized gains and profits. So why sell if I don't really have to? And I'll only sell if I really, really have to because then I'm okay paying the taxes.
This is the Saskatchewan Real Estate Podcast.
Hey there, and welcome to the Saskatchewan Real Estate Podcast. This episode is brought to you by Josh Betcher, team lead with Moulin, Betcher & Associates with eXp. I'm your host, Ronald Quaroni. I'm a licensed mortgage broker in both Alberta and Saskatchewan, here to guide you through everything that you need to know about real estate in our incredible province. Before we jump in, I've got a quick favor to ask. If you're loving the content and want to stay ahead of the game in Saskatchewan's real estate market, make sure to subscribe to the channel. Your support helps us keep creating this podcast and sharing valuable insights with listeners like you. And hey, I'm not just here on the podcast. I'm even sharing more updates and tips on behind the scenes content on Instagram and Facebook. Look me up, hit the follow button, and let's connect. Let's get into today's episode. Well, the Conservatives just made, in my opinion, the most impactful announcement of this election for Canadians who are really interested in real estate investing. What is the announcement? The Canada First Reinvestment Tax Cut is a proposed Conservative policy for the 2025 election. It would eliminate capital gains tax when someone sells an asset like property or a business and reinvest the money back into the Canadian economy. For anyone who listens to, the Bigger Pockets podcast, they always refer to something called the 1031 exchange. The goal is to encourage Canadians to invest in homes and businesses and industries without being penalized by taxes. And it's supposed to help grow jobs and the economy. And who better to help me react to this news by the Conservatives than Michael Hernik, the financial mechanic. Michael, for all things of state taxes, we love to get your perspective on it. So thank you so much for joining us on the Saskatchewan Real Estate Podcast.
Hey, Ron, looking forward to being here with you and discussing this important topic.
Okay, so number one, give us your background. You have a great YouTube channel. You share lots of great information on there. And give us kind of the overview of what this is and just kind of your reaction to this announcement of Canada's version of the 1031 exchange.
Yeah, for sure, Ron. So firstly, again, this is not tax advice. I am a CPA, but this is purely for educational purposes and opinion purposes only regarding the limited information we have. But yes, this is something I love to discuss because I just, these things sometimes keep me up at night with thinking of government policy and monetary policy and how is this all materializing. So yes, this news recently came out and this is really, really exciting. My reaction was very favorable. So let's maybe dive into it a little bit. So essentially, the US has the 1031 exchange. It's a code in the IRS code that essentially allows you to defer capital gains on like-kind properties. So essentially, if you buy, let's say, a investment home, like a single-family home, if you sell it, those capital gains are deferred into the next property, and then so on and so on. And essentially, you can perpetuate this forever, essentially. And so Canada is trying to sort of, I guess the Conservatives are part of their platform is to push this, and I think this is very, very good. So maybe we'll just do a very simple example here. So imagine you purchased a property for $100,000, okay, and now let's say you've held this property for 4 or 5 years or 20 years, whatever the case may be, and all of a sudden it's worth $400,000 for simplicity, right? So essentially, you have this 400,000 minus 100,000, which is $300,000 capital gain, right? So how this likely will materialize, assuming this is similar to the 1031, which I imagine it will be, the $300,000 of gain, again, the difference between the $400,000 and $100,000, essentially is deferred into the next property, such that the tax basis, so essentially, your cost basis for tax purposes on the next property is your original $100,000, not 400, right? Because if you sold that property today, essentially what's happening is you're going to have to record a capital gain on your tax return, a disposition of 400 minus 100, which is a $300,000 capital gain. So essentially, you're not having to claim this $300,000 capital gain and pay taxes on it. Essentially, you're rolling it into the next property by carrying the original cost basis, what we call tax basis, into the next property. So if you do this over and over and over again, what happens is that you're sort of growing. So it's essentially a tax deferral strategy, right? The tax will be paid eventually, um, if you sort of stop the transition into more lifetime property. I can go into that more if you'd like, Ron. But essentially, your tax basis will essentially remain the same until you sort of stop upgrading, so to speak, property, or rolling into lifetime property. So what'll ultimately happen if you do this multiple times is your tax basis is going to be super, super low. And the benefit there is that it essentially incentivizes uh, property owners and not just real estate. This could also be with business assets and other capital property to essentially transact so that there is no tax burden. And I think we're going to talk about sort of the pros and cons of this, but hopefully that gives you a bit to think about there, and a bit of a debrief of this.
And what an encouragement for folks who have real estate, who have businesses, to take those funds. And I know that maybe it doesn't factor in for everyone, but if you're going to pay a significant amount of capital gains tax on a piece of property, and we've touched on this before, that there might be the reaction to just hold on to that property and not move on from it. Now, what something like this does, it allows for a person to liquidate an existing property and move on to something potentially bigger and better. So, in a real estate example, you could sell the single family home, buy the fourplex, sell the fourplex, buy a 12 unit, and you have this nice velocity of property and money, and it allows people to scale up. So I know from people that I've chatted with, they are incredibly excited about this announcement, because especially for real estate investors, this capital gains tax really slows down that velocity of being able to scale up properties. And to have something like this, it would be incredibly exciting. And so walk me through, Michael, from investors, because you're connected kind of in the real estate space as well. When you're chatting to people, are they excited about this? Kind of give me your reaction from people who are in the real estate sphere.
Okay. Very much so. This has been something that the Conservative Party actually has brought before, but not to this extent. This by sort of Conservative leader Polyev is quite serious, and certainly a component of his platform. The real estate community has very much so to be excited about this, because one of the issues in Canada that we have, Ron, is that there is a lack of liquidity in real estate. And a big reason for this is actually because of the capital gains and the tax associated with triggering capital gains, right? So essentially what you have is you have owners who are holding property essentially forever, so to speak. And the only time they'll sell is if they really need to sell, because they know that, especially if property has gone up in value, which is usually the case over time, they're going to have these unrealized gains and profits. So why sell if I don't really have to? And I'll only sell if I really, really have to, because then I'm okay paying the taxes. What you're going to see if this goes through, is you're going to see a lot more transactions. And again, I think we talked about this from before, and I actually sent a letter to the government, and one of the pieces was this, which was the idea about, okay, well, you've changed this capital gains inclusion to 2/3, which again, I think we talked about this before. That is now deferred until next year, which is really good, especially during these times. But the point is that you want transactions to happen. You want people to be buying and selling transactions, right? And part of the reason why prices are going up is because there's a shortage of supply, and that's also true in the investment side, right? So imagine you have somebody who owns a fourplex now, and doesn't want to sell because they're going to pay the taxes, right? And all of a sudden now this allows you to say, well, look, maybe I want to sell this. I'm going to sort of take my profits and maybe go and build a property here, some kind of multi-property. I'm going to go and buy another fourplex and fix it and provide more rental housing to the community. This is very, very good. Not real estate investors is a big chunk of the marketplace that this will benefit, but it's not just them. It's also business owners who, for instance, let's say you have a business owner who has business assets or land and building, and again, let's say that these assets have appreciated in value, right? And maybe I want to move my facility, manufacturing plant, or I want to move my business to another location. Well, I'm probably not going to do that if I really don't have to, because I'm going to pay these capital gains if I sell it for a profit. Whereas now we don't have to really necessarily worry about that immediately, right? Because we're deferring it into the next property, such that maybe I'm going to now sell my existing property and go buy a new one. Again, we want transactions to happen, and this is so it'll absolutely open up more liquidity, which I think is very, very good.
Brilliant. I love that. And I want to expand more on how this could potentially benefit regular people, regular voters. I'm going to take a quick break and then we're going to come back after this. Real estate investing does not have to be a full-time job. Randall, Hoeber, and Boys Group Realty provide complete property management services in Yorkton and surrounding areas, allowing investors to enjoy passive income without the headaches of day-to-day management. From finding tenants to handling maintenance and rent collection. Whether you own a property or are just getting started in the market, Randall, Hoeber, and Boys Group Realty makes it simple. Call Randall Hoeber at 306-782-1323 or email info@ralixenterprises.com to take the next step towards hands-free real estate investing. Your property, our expertise. Whether it's your home, business, or farm, Pioneer Solar and Renewables has you covered. As leaders in residential, commercial, and agriculture solar solutions, they make clean energy easy and affordable. Visit pioneersolarenergy.com or give them a call to begin harnessing the power of the sun today. Are you investing in real estate? Let Krishna with Boys Group Realty take care of everything. Finding properties, purchasing, renovations, leasing, and management, leaving you to focus on building wealth. Whether it's a single rental or an entire portfolio, serving Saskatoon and surrounding areas, helping maximize cash flows and minimize stress. If you're looking for an expert to manage your investments, reach out today, home@meetkrishna.ca. Welcome back to the Saskatchewan Real Estate Podcast, chatting about the Conservatives' policy platform. They're not elected yet, so this isn't something that's totally set in stone. But if they were elected, part of their platform is introducing the Americans' version of the 1031 exchange, basically encouraging people to, potentially liquidate some assets and then reinvest them back in the country. Now, I have Michael Hernik, the financial mechanic, joining us to break this down. Michael, for someone who is not a property investor, a business owner, they're just an average person and they hear about this, their initial reaction was, this is only something that's going to benefit the rich who are already doing fairly well. Can we talk about A, that reaction, and then B, how this might benefit regular folks as well, even though they're not directly correlated maybe to owning the assets?
Really great point and question, Ron. So you the I've been talking a lot with friends and others about this, which is we want businesses to be successful, to have a healthy and successful growing economy. We want the private sector, private industry to be reinvesting into communities, into the country. Why is that a bad thing, right? So particularly with this, what you're going to see is that if this were to go through, you're going to see more supply come into the market, particularly on the sort of single family and multi-unit space, because what it's going to do is it's going to incentivize industry, whether it's sort of your mom and pop investors, or maybe you have your sort of larger real estate developers, to really sort of double down and build more supply and invest more without having to worry about the capital gain treatment, so to speak, on the product that they're bringing to the market. And and even people that are sort of fixing and flipping properties, it's really good. So yeah, the big benefit is we're going to see more supply come to the marketplace, and we're going to have more transaction, which is very good. And this is what we want to strive for. Again, as companies reinvest more into building or renovating, this is going to pay contractors and laborers, and you're going to have to buy more materials. Like, it's a whole loop. It's not just a matter of, oh yeah, so XYZ company who's a real estate developer is going to make more money. Yes, they are going to make more money, but what's the byproduct of that? They're going to also spend more money. They're going to pay more payroll taxes for more employees. They're going to be buying more materials at your local Home Depot, hardware stores, whatever the case may be. We're hiring local plumbers, electricians. This is very good news, not just for those that are sort of the investing side, but everyone else that's related directly or indirectly in those markets.
All right. I don't want to be a total cheerleader about this. I'd also love to see if there are any critiques to this, or are there any negatives that could come from doing something like this, where we're deferring the capital gains tax on these assets. Walk us through any drawbacks, risks associated with implementing a strategy like this.
Okay, I had a hard time thinking about things that are why this would be potentially problematic. One of them is there's going to be less tax revenue for the government. Okay, so because these capital gains are essentially being deferred into like-kind property, or again likely to be implemented the same as the 1031, the government is just simply going to have less revenue. And Polyev in his platform has already sort of mentioned this, saying, well, yes, we're going to see less revenue from less capital gains being recognized. Okay, but that being said, yes, we're going to see some less tax revenue, but we're also going to see likely higher GDP growth, more supply coming to the market, and just more growth in general from all of the ancillary services and products that I've already mentioned earlier, associated to people just transacting more properties with respect to reinvesting that money into the community, hiring more people, hiring more businesses, local business, and so forth. Okay, so that's one drawback is the government is going to see a little bit less tax revenue. But again, I do believe that the benefits absolutely outweigh the disadvantages here. The second one is, yes, unfortunately, this will benefit those who are sort of investing in property that are sort of otherwise would have paid the taxes but aren't anymore. So again, I want you, I encourage everyone to think about, like, again, yes, that is likely to happen, right? You're going to have, investors who are deferring these capital gains and are going to be paying a little bit less tax. That will absolutely happen. But what's the other side of that coin? The other side is that we're bringing new property to the market. We're bringing more units to the marketplace. Again, everything I said earlier, the reinvestment in the community is just absolutely, in my opinion, it outweighs the benefits, outweigh the disadvantages here. So it's, I'd have to think about it more, but those are the kind of things that come to mind. Unless you have anything else, Ron, you want to add on that?
As you were speaking, Michael, it just kind of occurred to me that this is a really great idea. I think it is something that broadly a lot of people could get behind, from the economic standpoint to the ability to reinvest back. And maybe it doesn't even have to be a conservative policy. You would hope that this something that, if it did make this much sense, that maybe even the liberals would consider something like this, that if they did get into power, they potentially look at rolling something like this out. Sometimes this becomes kind of a political football that it doesn't appear great, because it has the appearance of benefiting folks who have more than others. But as you point out, there is kind of a trickle down economy effect to this. And I did want to kind of end this off chatting about kind of the macro side of this. I think what I saw, there was a post that, over the last around decade, we've lost $500 billion to American investment, where $500 billion Canadian dollars have moved down south of the border. And I think something like this does help to kind of reestablish parity with America, to say, hey, reinvest those dollars back in Canadian businesses. And that does help to kind of stop this leach of Canadian businesses down to the States, which I think is becoming a bigger and bigger problem anecdotally. As Trump talks more about these tariffs, more and more business have to look at the dollars and cents and say, it just doesn't make sense to do business in Canada. If we have the ability, we should move down to the States. So give me your take on this from a macro standpoint, on the economy side, Michael.
I'm glad, Ron, you brought this up, because one of the things that I've been deeply concerned about is the lack of competitiveness Canada has had over the recent years, and we are now starting to see this reverse. One action of this was to sort of defer the capital gains inclusion change from 2/3 to 50% till next year, and likely it'll be completely scrapped. It hasn't yet been, but that's what is being platformed by both parties. So that's a very good change, because in the US, the capital gains rules are much more favorable than Canada already. And then if they would have implemented this 2/3 change and kept it, it would have just made Canada a lot less competitive. Okay, so this is going to even the playing field on a capital gains side. Again, capital gains being when you're selling capital property. So that was a very good change. Now, if this also comes through, this is also going to make Canada a lot more attractive for investment. And Ron, you brought up a really good point. There has been a lot of capital that has left Canada. Lots of businesses, investors are actually no longer investing in Canada. They're investing in the US because the prices and deals are better. Why is that happening, right? It's because Canada has become, unfortunately, a little bit less competitive, a little bit less liquid, less transactions, more expensive, and all of these policies perpetuate for that to have happened. So like I said, I'm actually optimistic that if this capital gains deferral, whatever this gets coined as in Canada, will cause will result in more liquidity, which will cause prices to at least probably not go up as quickly, if not stabilize, maybe in some circumstances go down. We want more transactions. That is super, super important. You want private industry investment to invest. So yes, this likely would bring a lot of that capital back. And again, it's something that I think most of the public may not really necessarily realize, that the benefits of something like this would happen. So it's just a little bit hard to communicate that, I guess, through this change. And I think the Conservatives are doing their best they can, but it's something that I think everyone should really be excited about if this were to happen.
All right, one more quick break and we'll come back with Michael Hernik, the financial mechanic. The Saskatchewan Realtors Association supports over 1,700 realtors across the province. Their members provide expert insights to help you navigate the market. Visit sra.ca for monthly stats, industry updates, and to find a realtor near you. Welcome back for the last time to the Saskatchewan Real Estate Podcast. This was such a monumental policy announcement that it definitely deserved to be talked about. And Michael, just to wrap us up, let's talk about the importance of diving into political parties, what they're saying, what they're presenting, and how this affects all of us when we're kind of getting out to vote at the end of the month. Just walk me through your kind of like your personal opinion on the importance of understanding different parties' platforms, and just the importance of having your voice being heard and having different conversations with folks.
Yeah, and I think that's right. You know, unfortunately, when it comes to discussing any tax legislation changes, you unfortunately do have to touch on the politics because they do relate. And I don't want to sort of go down the political route, but I think it's really important that everyone sort of take a step back and, you know, take a look at what each party is platforming on and see if this aligns with what you feel is the best next step for Canada. Do your research into this. If you are an investor, I think it's a great time to think about, if this change were to happen, how you would maybe could take opportunities in this route. And even if it doesn't happen, you know, how may you need to sort of think about your portfolio or investing into the future on how you can sort of deal with the next sort of changes to come. Because I will say, Ron, regardless of what happens in the election, change is coming. You know, again, I think in general, I think there's lots of reason to be optimistic. We can say a lot of sort of, you know, sort of pessimistic things about, well, yes, we got the US looming tariffs and so forth, but you know, really we're at a position, it's really only up from here in my perspective, right? There's a lot that I think any of the parties can do to sort of make a really material impact to Canada in general. So I'm actually quite excited to see how this materializes. So
I'll kind of take a different tangent just to end us off here. I had a friend of mine who said maybe Donald Trump is doing all of this to bring Canadians together. And I think, you know, one positive from all of this is it is forcing, I think, politics and Canadians themselves to work together and to come up with more comprehensive solutions to what we're facing. And the one thing that I do like from what I'm seeing from this election cycle is a lot of the politicians actually talking about very similar things. And I think that shows kind of a collective unity on where the country needs to head. So I think we can thank Donald Trump for that we are seemingly moving in a positive direction, as you kind of outlined, no matter which political affiliate you're kind of hitching your horse to. And so I really appreciate you coming on, Michael, giving your expertise on this topic. Always happy to have you on. Just to end us off, where can people get more information on the financial mechanic, and how can people take advantage of some of the great services that you offer for business consulting and your YouTube channel as well?
yeah, for sure. So thanks, Ron. Appreciate that. If you are interested to have a chat about anything, reach out to me on Facebook or LinkedIn. My email is mike@thefinancialmechanic.com. Happy to connect. And yeah, looking forward to the next conversation, Ron. And I appreciate you having me on.
Wonderful. We'll see you at the ballot box, Mike. Thanks very much.
You bet. Take care.
Thanks for tuning in to the Saskatchewan Real Estate Podcast. Don't be a stranger. Whether you're buying your first home, refinancing, or investing in real estate, I'm here to help you navigate the mortgage process in both Saskatchewan and Alberta. Use the booking link below to schedule a time to chat. If you found this episode helpful, don't forget to hit the subscribe button so you never miss a valuable piece of real estate information.